waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions, phone or silent mode, deciphering the market, cracking the code, precision entry, the setup is clean, living the life inside the machine.
Patterns forming, packets called, balance base draw down, standing strong through it all. Risk defined, profit inside, Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. Yeah, the crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call, balance base draw down, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 on match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision, we are the flow.
Good morning and welcome everybody to the Seacrest Markets live stream. What a sad day. This is Friday. It's the last day of the trading week. Now, all that means is that I won't be doing one tomorrow. I will be back next Monday, so don't worry. It's only a sad day today. It doesn't necessarily mean it's over. It's just time for a break. Markets. What a day yesterday we had. I don't know how many of you actually took advantage of the trades that came up yesterday. So feel free to drop a comment if you had any trades that you hit, be it long, be it short, whether you hit a win, whether you hit a loss, whether you hit a break even. But I did get a few messages from a few followers. But the one that was pretty nice to receive, let me just, I'm going to pull it up. I'm going to show you on my phone again to show you that what we talk about here works. What we talk about here is backed by experience. So, oops, 1 second. The story loaded too quick. Have I got it? Have I held it? Yeah. So, as you can see here, lovely personal position thanks to myself. I'm reading backwards, by the way. Breakdown on Seacrest Markets live stream this morning. Cool, that's me reading backwards. So this individual took a short trade in Bitcoin, sold 10 lots, shorted it from 67,400 spot 29 yesterday at 12:15. Again, I don't know what that is server time. That could be a little bit later. That could be 10:15. And closed the trade at 65,660. So a nice $2,000 drop, give or take, a bit more. And 12,000. Oh, I've lost the story. $12,772.21 banked. Now, that is a great review of not only Seacrest Markets, but mentioning myself there as well. So it's nice to see that our live streams are actually helping people to either add confluence to their ideas, overlay additional confirmations, and build up their own ideas so that they can execute only based off of their ideas, formed and discussed through, I guess, open education, open decisiveness. But one thing I must say is we are helping people to make money in this market, as I can show you again here. Off the back of a live stream, someone executed their own edge using the confluence set to make 12,700. So we're very bad scammers because we're giving people the opportunity to make money. So pretty insane. But welcome back, Swing Cat Trades. Good to have you here. It's an honor and a pleasure. And good morning, Ryan. Good morning, Anthony. I am a bad person, aren't I? But honestly, Swing Cat Trade, stick around. You may learn something. You'll learn how to trade. You'll learn how to break down the markets. And you'll learn how to analyze top down and bottoms up. We can do both here, be it we're looking at technicals down into the fundamentals, or we're looking at the micros inside a corporate entity and we're expanding that up into the technical. So stick around and you may learn a thing or two. Now, we have an exciting day today. I said this to my daughters this morning and they said, no, Dad, that's boring. But rest assured, I believe it's exciting. We can talk gold. We're going to talk gold. We're going to talk DXY. We're going to talk yen. We're going to talk even euro dollar. And we'll also cover, obviously, indices as well. But yesterday was a good day in the markets. I mean, yeah, I can't really say much more than that because it was a fantastic day. I want to start off with just discussing CPI data today because it's critical. We've got US CPI inflation data arriving later today. It is also Friday the 13th. So for those of you that believe the 13th on a Friday is a bad day, then be aware of that. But I think markets are going to be facing some pretty high stake moves today. Obviously later as well, bearing in mind it is Friday. Tonight is the deadline for the Department of Homeland Security funding with the DHS. So we need to keep an eye on all of this stuff. It doesn't necessarily mean we need to be in the market to do so. We could close all our positions. And if you really love the financial markets, not trading, if you really love the financial markets, you'll keep a breath of what's actually happening in the economy, in the markets, whether it's the macros or the geos. So really the consideration for today will be continuing to unwind on the no landing reality based on the non-farm payroll data and the idea that the Fed will push back GDP rate, push back rate cuts all the way back to July 2026. Then we'll obviously be factoring in the looming shutdown. Okay, so whilst most of the government will be funded through September, the DHS funding will expire tonight. So the negotiations are currently stalled over parliamentary gear restrictions and body cam mandates for the border agents. And it kind of comes on the back of what happened with the recent border agents versus border security versus civil rights and the political risk heading into the weekend because there was that high profile killing by border agents. So they're trying to find a fair balance to assist the border security, the border patrol, and make sure that they are legally staying within civil rights. So I'm sure I'd love to be a fly on the wall in that room whilst those negotiations are going on, because they will be heated indeed. All right, so before we break down gold and the DXY, I like to always hit the indices. It's pretty much my main focus, my main area for me to look at. But the good thing about doing what we do is we get to keep an eye on the markets at all times, no matter what the instrument, no matter what the asset class. So when we talk about indices yesterday, I know I'm showing the S&P 500 on the screen, and I appreciate it's in front of you. So I'll zoom in as much as I can. But it just looks horrific on my screen. So it's very difficult to do so without it looking like a one-year-old has got a crayon and drawn all over the walls. But then again, saying that, when we go down to the lower time frames, and I do that with the paint tool anyway, it looks like a one-year-old's drawn all over a chart. The only difference is we can clean our charts a lot easier than we can clean our walls, even if we have the best paint in the world. Now, so I know the S&P's on the screen, but the Dow Jones slipped yesterday 600 points. Huge tech sell-off continued to resume. So it's clear that we've still got the SaaS apocalypse. We've still got the AI hangover. Cisco yesterday dropped 7.6%. That is a drop. So negative 7.6% drop, which comes down to, very simply, investors are moving out of high valuation AI software, are moving out of risk, and they're moving into your staples, your defensive, your value stock. So energy, healthcare, staples, okay? They're looking at those areas that remain fairly unaffected by global economics, global uncertainty, investors transferring out of risk into cash or physical metals. They're moving into defensive value stocks. So again, energy, healthcare. We can even look at companies like Target, which I've discussed, McDonald's, places where they will continue to do well. You know, we could look at your big supermarkets. Obviously, again, we could look at your energy sectors. We could look at tobacconists. We could look at your defensive companies. There's one company that I absolutely wish was listed, and unfortunately it's not. The guy who runs it is an absolute genius. I'm just trying to find my notes on this person. But the guy who I can't find it. That's a shame. That is a shame. Sorry, I just changed the charts by dropping my phone. Oh, everyone wants to look at gold. We'll talk about that in a minute. But yeah, so what's really so that's the summary. So the goal is get out of your risk, move into your defensive and your value stocks. But why are companies struggling? So the big hardware giants, they're seeing high memory costs, and that is pushing revenues down or margins. So unfortunately, that's being seen, and because we're seeing this huge battle at the top between the SaaS companies and the other tech companies, we are really starting to try to filter out the race. Who is actually going to come out on top? I mean, there was an absolutely incredible meeting event discussion yesterday with Elon Musk and XAI. And what the takeaways were for me on the back of this XAI meeting was pretty bleak. When you actually look at what's happening, whilst Elon's an absolute genius, right? He's looking at doing server centers on the moon and expanding that out across into Mars and the likes of that. The question for me will always be, how do retail investors and professional investors that aren't necessarily deemed as accredited get involved? How do they get exposure? And they're the kind of questions you need to be asking yourself as an investor. Is, for example, the IPO that comes out later this year for SpaceX. How do you get involved? There are many companies out there that have got seed IPOs, stocks, shares inside SpaceX. There, how you get involved if you don't have access to the IPO, right? How do you get involved in other companies that have got exposure into it? You buy their stocks, you buy their listings. So you've got to start thinking about, okay, if Elon and his companies want to do things on the moon and Mars, the question to ask yourself, and I put this here, is which companies are exposed to SpaceX? And the goal is to figure out which companies benefit from this and how do we as investors get exposure. So I'm not going to give you that on this call. Maybe I'll do a separate call on that. Maybe we could talk stock shares, investments at another time. Whether you're listening to the live stream or whether you're listening to the recordings, please feel free to drop a comment, be it in this live stream or in the recording, so that we can actually go over them. If there's enough demand for people to talk about it on our stream, then that's fine. There are other streams that I've been invited onto to discuss this sort of stuff, specifically around investments across Europe, UK, and the US, where I'll be obviously hosting and where I'll be discussing those ideas in greater depth. So feel free to join me on there and keep an eye on my X for those when they're usually kind of late in the evenings or around lunchtime or at the weekends. So keep an eye on those. But again, I don't work for any other company. They're just inviting me on as a guest. So let's talk the S&P. Now, we'll start out on the daily. I appreciate it looks messy, and I'm going to zoom in as much as I possibly can. Now, yesterday, we had this huge sell-off. The S&P traded down from, well, it originally tapped a high of 69.72s, and it traded all the way down to a low of 68.22. So a big move. I mean, you wouldn't have wanted to be long, right? So expectations for today realistically are we looking to continue to the downside? Now, realistically, we've respected this kind of high now. We're potentially going to see if we can break this low. The market on a higher time frame is still sitting inside a range. You know, we've still got this low here, and we've got this. So that 67.20 area is going to be the base, the floor. We want to see if the market can actually break that. I mean, I don't want it to, I'll add. I don't want it to, but the market doesn't do what we want. The market does what it wants, and it can remain irrational longer than we can stay solvent. So if you're day trading and you're trying to catch longs, just be very careful, be very nimble. Remember what's happening today. CPI, government potential shutdown, underfunding in certain departments, and a lot of uncertainty. However, that being said, you know, we failed to take the high, we took the low, we've now respected supply. So the natural next step will be look for confirmations on the daily that we are actually going to trade lower. Now, the beauty, the blessing, and the curse of being in front of your screens or day trading is on the lower time frames and the mid time frames, we start to see and have the ability to try and get involved in your intraday, intra-market moves. Now, we have to be very, again, nimble. We have to mitigate our risk as much as we possibly can, which we know inherently is very difficult to do. And we also need to be aware of what the higher time frame is saying and wanting and doing. Now, at the moment, as I've touched upon, 67.20 is the level that we would like to see go on the daily if we want to see further prices to the downside. We want to see bearish momentum continued. We're seeing lower highs on the 4 hour. We're seeing lower lows on the 4 hour. With that 4 hour high being respected, we've got that huge sell-off to the downside. We would have liked to see maybe a little bit more to the upside, which we discussed yesterday, which was that break, trade a little bit higher and then trade lower. I don't think we quite got that, which we can take a look at on the lower time frames as to the actualities of that move and the exact elements of that trade. But overall, maybe the market's going to be taking a pause, because if you look at what happened yesterday, we had that huge sell-off at 10 a.m. New York time, right? Big sell-off, 10 a.m. New York time. Market then continued to drift lower. But this morning, if you currently look at that 4 hour candle, which I'll zoom in on just to show you a little bit greater, we have failed to take the low at 68.07. So 6,800 and around 68.05s and stuff like that is trying to create defensive. We want to be buying. That's what you can see. So we've had that push up. Sellers have tried to come back in and we're starting to push back up. So we're seeing a pullback on the 4 hour. I mean, the overextended sell-off was pretty aggressive. Doesn't necessarily mean we're going to get a deep pullback. You can see on this move up, we had a huge move to the upside, very shallow pullback, and we continue to the upside. Same here, very extreme sell-off, expansive move, very voracious to the downside. We came into the demand. We had a pullback into a buy to sell premium wick, and then we traded to the downside. So we could get the same here. So factoring in that buy to sell premium wick, and I'm not saying this is what's going to happen. I'm just kind of trying to piece this puzzle together. And that's what we do. Mathematics, puzzles, probabilities. That's what we do. We do all of this to understand how we could get involved in the market. We could just get a pullback into this area here. I mean, there's two areas that we could get that pullback into, right? It's this range, which is that 6,900 handle, which is that big round number, which is my preferred area. That's where I'd prefer to be getting short if I was to take a short. Alternatively, we have this decisional level around that 68.5 handle, which is about 25 plus on the ATR. And that is another area that could cause us some resistance, some area of supply taking control. So they're the two areas that if I'm going to sell, they're the areas I'm going to sell from based on the 4 hour. Let's trade down into the 60 minutes, see if we can tweak and refine those levels a little bit more, which we kind of can. You know, if you've got this, we pull that up 68.55s rather than 68.50s. And then this was that bigger level. Oh, sorry, no, that one is this one. Sorry, that's what I mean. It gets a little bit messy. Like I said, children drawing on your chart. There's imbalance inside these two candles, so mate, it could just generally pull back into that. So let's wait and see. But the refinement is to the extreme, right? Give me 1 second. So that's the extreme of the move, about 69.60s. Obviously, we've got these two bearish engulfing Marabuso candles that have a lot of imbalance in them. So I don't know if many of you trade Fibonacci retracements, but that would realistically be about a 50% Fibonacci to a 61.8 retrace. That initial decisional level will be around the 27% mark. So you are going to get a bounce around the 27%, but more so you'll get 61.8 and your 50. So, I mean, that's about your ATR 75 at your, I'd say your ATR 100 is 61s and your ATR 70 is about your 50 level. So if you trade fibs, I'm pretty sure that would be there. This is a fib tool, but it doesn't have your fib. Okay, so your 50% is 68.92. So your 61 will be about 6,905, 6,908. So in between the 75% and the 100% ATR. If we get a full retrace, then, you know, we're looking at 69.44s, which is about your 75% mark, 80% mark, which is good. That's your real extreme on the premium. So let's wait and see what's going to happen there. We come down into the M15. Could we get involved in a counter momentum front leg move? Probably. So I want to break down these shorts as well, which we'll do. We can do that. But so let's do that first and we can talk about present after. I'm just trying to find out, where was we last talking? So let me go back into London. Let's go back into London. All right, London. So we were talking yesterday about, so there's a, this is really, let's go 5 minutes. Let's go 5 minutes. Okay. Let's go 5 minutes. So we were discussing the idea of selling off into the, sorry, something just fell over. Did anyone see my books fall over? There's a ghost. Give me 1 second. I know why that happened. So last night I was getting out, I have a Pokemon collection, and I was getting out some of the sleeves because I found in my, so there's different cards. So you've got the original cards that are from the 90s, which I've got the full base set. They're secured somewhere in a vault. And I also have some Topps cards. Now, obviously, I'm doing some research on them at the moment, and I got a little bit excited yesterday because the one, so this one at the moment, which I've come across on the auction websites, is so 106 on the Charizard, and as you can see, it's currently up for about 250,000. So I got a little bit excited because that's my version. So obviously I was just double checking against the PSA guidelines to see, because this PSA rating is a number 6, and I'd probably say mine is an 8. It's probably not, gem mint at 10, but so I got that, and then I noticed that they had a Blastoise up there, which was for about 130,000. And again, I've got that in my deck. Again, near mint condition. So I ran down here just to grab some more of those so that I could re-sleeve them. and then get them regraded by PSA. So yeah, that's why they fell down. So apologies. Anyway, so we were discussing shorts. Now, we had the idea that we were going to be getting short from this extreme to trade back into this demand. Now, why did I say that? So we were talking about how price action was trying to trade higher, and it was just wicking those highs. Even though it's wicking those highs, we do consider if we don't get a break that lows are weak, right? Now, what we had observed during that live stream yesterday, so if you haven't seen that live stream, go back to it, but what we observed during the live stream was, even though we was only wicking the highs, demand was still being respected. So the theory was we wanted to short the extreme back into demand and take about 90% off of our trade, or fall up to the idea and execution of yourself only. And then we wanted to go on to leave either 10% of the balance running or trade out the full position. But the initial idea was to trade from that extreme, let the market have its day. Now, stop wise, again, if you had your stop a little bit tighter, you would have been hit on this trade. You can see it closes you out, right? Had your stop been a bit wider, again, your rabbit's nose would have been going. You then would have potentially seen your 1R, which is about here. And then, of course, it would have traded into demand. Now, again, observation is key. What happened? Demand was respected. We started to trade away. We then came into supply, originally respecting supply, but failing to trade lower. So these two are weak. What then happens? We come down, we take out, we take all of this out. We then trade away from this move, and we get this move here, right? What happens after? Pretty erratic, I'm going to be honest. You know, we start trading into pre-London Open. We trade higher. So we've now got another change of character. We need to see, if we're going to go higher from here, we need to see this hold. What happened? We came in, we traded, we swept. This low is weak. Likelihood is this is going to go. So this low is weak. We then traded into the US session. So 230, the open, we had that initial open, tried to push up, bulls pushing into the market. What happens? We then trap the bulls, we push to the downside, and we sell off. Now, in that sell off, if we go, I'm going to move to New York timings now because we're in New York, right? Come back out to the M15. The opening candle, which initially, as you saw on the 5-minute, was bullish, on the 15-minute, it was a very bearish shooting star that created, it does create some indecision, okay? Because it doesn't necessarily mean you want to short it immediately from that candle. There are some communities out there that do. I have the pleasure and honor of seeing the way they trade, and they scalp gold and indices throughout the day, and they trade S&R, support and resistance, and then they combine it with candle patterns. Now, they would have had a short immediately off of 69.60s. They would have had that as soon as that candle trade below. As long as the high is intact, they would have this. And what they would have done is they would have done this. And then passively, they would have had their stop above that high, this high here, this wick. Aggressively, they would have had their high above this. And they would have moved that stop from there to there on this candle. And they would have... well, the reason they would have done that is because when this candle traded lower, they would have expected, if this candle is strong and we are actually naturally experiencing a sell-off, this high should be intact, right? That's what they say. And they would have taken a couple of R out of that trade and moved on. So the sell-offs were there. Market aggressively sold off from the US Open, which you can see. Really nice trade available. Again, we wait for confirmations. We wait for confluences. We're not aggressive traders. We're aggressive when we need to be on our executions, but we're not aggressive in our impatience and discipline. We have to stay focused. We have to stay disciplined. We have to stay patient. There is no room for complacency or ignorance in the marketplace. You will have everything taken away from you very, very quickly. And there are traders out there that want to be on the other side of you. And we will happily, or they will happily, take your money from you if you're being stupid. So obviously confirmation came in, market sold off. We had a 1-to-1, we had a 1.5, and to be honest, if you're holding any balance or you're holding full size, I mean, as one of the viewers in here will know, that's a proper rodeo, you know. That is a proper move to the downside. Again, you're not bottom ticking. You're not bottom ticking, but if you were, 8R. So let's say we take half of that. Let's go for 4R. I mean, there's your 4R. And you can see that the market just continues to trade lower. Now, again, with us, you can continue to trade throughout the sessions as long as the market's open. As you can see, you just got to factor in spreads, swaps, rollovers, and then you can continue to have at it. You know, if you're trading into this, you don't need to close your positions out like with futures, prop firms. With CFD brokers, you get to have and hold the position for as long as you want, and as long as you've got the margin, as long as you don't get stopped out, and as long as you've got enough capital, right? Which is margin, basically. But they look like, so lots of people would have been catching this momentum to the downside. They would have been looking at the candles and pretty much just hitting it and scaling in. If you're aggressive, easy, you know, one position, if one position isn't enough and you want to stack that position and you can do that, then there's the ability to do it. You know, there's no volume in it. Like, it's just being smashed. Like, we're literally smashing the bids until someone steps into the market to find a buyer. And, you know, we started to get that in and around here, about 68, 67s, which halted the market for a little while. But all it did, right? All it did was range. So let's just draw a little rangey box. That's a range box for now. We ranged. We then broke to the downside. We then came in and we swept. But we were immediately reversed and we failed. So we're looking for this to go. Once we get confirmation, we could have added in our CFD broker personal accounts, we could have added another trade. There's your 1-to-1. Sorry, there's your 1-to-1. My mouse moves. My mouse moves faster than my speech. And then 1.5 is down here. So again, if you're hitting your fixed 1 to 1.5, so your fixed 1-to-1s, then you would have been out of this trade. No questions, no observations, no effort needed. Alternatively, you're managing and nursing this position and you would have reached a maximum, an absolute maximum of 2.6. But let's say you hit a fixed RR of 2, then there's something available in there for you. But I'm not going to put my RR to that because I can't even be bothered. So again, further opportunities to sell off in this leg and in the continuations, and before we transition into Asia. Now, as we come into the Asia session, as you can see, markets are range bound. Let's have a little look. So, how do we get involved in a pullback? So we've taken this low. Like, this is an area of supply that we could look at, but this is the one I'd prefer, if I'm honest. So I'd like to see, which we have already got, right? So we have supply fail, demand in control. We then push up. I want to see this level go, because if this comes back and respects this, then I'd need to see this break anyway. So then from here, we could look to get involved. And we're trading the front leg at this point. So there's an idea. We're looking for market to break, and then we can obviously trade off the back of that. And then we'd look to trade into about that 68.70 handle. Then from there, we'll obviously try to identify what the market wants to do. However, I believe coming into the US session with CPI data and the DWS scenario, that markets are going to be DHS scenario, not DWS, my apologies, the DHS scenario. I think the markets will be fairly flat coming into those. And I think we will want to look for wait and see what happens in the market. Now, let's transition into gold. We had a 3.5% liquidation yesterday in gold. This morning, we started to see it recover slightly. But what it is done, or what it is doing, is being caught in a tug of war between geopolitical risk and rising yields. So geopolitical risk is bullish, but rising yields is bearish. Okay, so I mentioned yesterday why you want to keep an eye on what's happening in the yields in the treasury markets, because if we get rising real yields, that's bearish for gold. But if we get continued uncertainty of geopolitical risk, that's bullish, right? But at the moment, we've got both. We've got geopolitical risk and we've got rising yields. So we're caught between the two like a deer in the headlights. So we're playing tug of war between the bulls and the bears. And the very similar scenario with silver, but gold sold off significantly. So let's break it down. Let's go back into Thursday. So we had that range. We were talking about the range in gold yesterday, right? So let's break it up. Let's break it down. Whoa. Did I not draw much on gold yesterday? I can't have. So we had this range that we were curtailing in, right? So I don't know. We got this. We got this. So we were trading from extreme to extreme. We had a fake break to the upside, trades back in, respects demand. We had another push to the upside. It does trade and break above, but it failed to hold. It failed to hold that 5,075 level and continue higher. What then happened? We had break of the upside. Oh, break of the downside. So if we're now shifting to suppliers in control and the bears are taking over, after this break, we want to see ideally the extreme hold, which, as you can see, holds perfectly. Now, I've said this time and time again. Many of you will try to call this top, and on this occasion, you would have got it right. Very good trade. Well done. Genuinely exceptional. That is an art and a science to be able to do that on a high probabilistic basis. More often than not, you're going to get smashed to smithereens. But if you caught that, well done. And that could make your year. That really, let's be honest, that move could actually make your year, let alone the Friday two priors ago, right? That sell-off, that's 100, 200 grand sell-off in some cases. That's a couple of million. And I've seen it. So well done. But let's not try to be a hero. As traders, you want to stay in the game. Doesn't necessarily mean you always need to be trading actively, but being in the game, keeping your gunpowder dry, taking a few percent. Okay, good conversation I had with someone yesterday, and it's an ongoing conversation. It's about what do you want to achieve from your day trading? If you are a full-time day trader, or if you are a part-time hobby day trader, which most are, what are you trying to achieve? Are you trying to escape your day job? Are you trying to keep a day job away? And then you have to look at all your outgoings. Okay, how much do I have saved up? So let's say I have 12 months worth of expenses in the bank. Nothing else. Got 12 months worth of expenses. If I was to replace my outgoings with my incomings, what do I need? what do I need to make from trading, or what do I need to make from my day job in order to day trade as well and make additional capital for my side hustle? Or what do I need to make to stay away from work? Well, let's say all in your bills are $6,000 a month or $3,500 a month. Well, that's what you need to make, right? At the very minimum, But what we're seeing people do is put $500 into a trading account and lever it up to their eyeballs and blow it, because they're trying to make $3,500 off of $500. You need to look at it differently. You need $500,000 or $1 million or $100,000, and you need to only make a couple of percent. If you're trading $1 million with 0.25% risk per trade with a prop firm, and you know your edge, you've got to make lesser percentage in order to make a good notional value. So to make $5,000 on $1 million is very easy if you've got the right edge, the right methodology. And okay, it's not leaderboard status, it's not Lamborghini lifestyle, it's not Patek Philippe's and Audemars Piguet's and Rolex's and all of this jazz. But what it is freedom to some degree. Because this game, people always talk about escaping their day job to become a day trader so they're free, so they can live this esoteric laptop lifestyle. There's no such thing. There's no such thing. You end up working 24/7 or 24/5. You spend most time at your screens. If you're a swing trader, slightly different. But people always talk about this freedom, but do you think investment bankers, broker dealers, market makers, they're sitting on a beach sipping pina coladas, working an hour a day? No. They're working 8, 10, 12, 14 hours, maybe even 16-hour days in order to get this, okay? In order to make that money. They're playing, in most scenarios, they're playing with the house's money. They're playing with the bank's balance sheets if they're still doing that. So they don't necessarily have the same risk, and they're also paid to do so, right? They're getting, an analyst at Goldman's, for example, will be getting 150 grand a year, and you're just an analyst. Your top end is obviously a lot higher, right? But they're getting that money to work a day job plus a bonus, up to 100% of their bonus, right? Up to 100% of their earnings. So let's say they earn 250 grand as their basic bonus. Basic, they're getting another 100% on top of that. So they're getting another 250 grand. Then they're trading on top of that, okay? And their performance is immediately linked to their bonus at the end of the year. So they don't get necessarily paid quarterly. They don't get paid biannually. They don't get paid every half a year. They get paid annually, right, on the performance bonus. So that's why towards the end of the year, they start to dry their powder up and not take any more positions, because their portfolio right now is at its highest point, its peak. That's what they want to be paid on. They don't want to be paid on something if they take another loss. If they get another loss, that means their bonus will reduce. So just remember that when you become a prop trader or a day trader, be it with personal or private personal, private, or third-party capital or prop capital, ideally, and I've always been the big proponent of this, have a supplemental income. There is there's no ego involved. Make sure that you can put food on the table, clothes on your back, and a roof over your head, and have a little bit of a good lifestyle and trade alongside it. Try to get AUM as high as possible. The more AUM you have, the lesser pressure you need to put on yourself, and the easier it is to make a good living from the markets. And that means even if you had a bad month, your good months will make up for it. And that is the goal, right? For everybody that's out there, I think. But this move could have been exceptional. Now, for me, again, I don't take top moves. I would wait for further confirmations. I've been there. I've called tops. I've called bottoms. And at times, it's great, But the majority of times when you're picking bottoms, you get smelly fingers. And when you're calling tops, it's very difficult as well. So that sell-off would have got a confirmation from me. We'd be looking for something maybe a little bit lower down. Again, similar scenarios what I've discussed. I'll be looking for short somewhere inside here. I'd have my stop protecting something significant in this area. I might even trade above that. I'll be looking for a 1-to-1 first, got that. Looking for a 1-to-5, got that. And then I'll be leaving about 10% in the move and just seeing how it pans out if I'm feeling a bit ballsy, right? If I'm thinking about the way the market's moving, I'm happy to look for that, and I'm happy to look for a continuation. And depending on the rules and depending on where I'm executing, if it's personal, then there's no rule. So have at it, scale into that trade as much as you want. And if I'm trading on prop firms, then of course I need to be very precarious and very careful, because so many different rules, so many different nuances, and so many different platforms that I have to execute across. So I need to be a lot more nimble, a lot more careful. And I can't necessarily do what they deem as one-sided betting, or I can't layer into a trade or scale into a trade. All right, so market sold off significantly. Beautiful move to the downside. I mean, can he get more textbook than that? Probably not. And then we have that push up. Market then comes and respects the demand, respects the low. And then from there, we start to make our bull case again. So we break up, we slightly take that supply, but not with any degree of confidence, I must say. We then come back in, we fill that overnight gap that we hit. We then start to trade up. Market moves up. What do? We don't pull back into the overall. We pull back into the range higher, which is also part of the imbalance. We then push up to the upside. What happens again? Similar scenario. We pull back into the market inefficiencies, which is the range. So we could probably write this up. Give me 1 second. Oh, tight. We then come back in and we continue to the upside. Now, early European, pre-Frankfurt Open and pre-UK London Open, we have some bullish cases to be made, but nothing significant. And now what are we doing? We are putting in lower highs. We are putting in higher lows. London, Asia is doing this a lot lately. I do miss the days of trading smaller capital, though. I think you have a freedom when the money isn't particularly high. It took me a long time to be trigger happy. Trading similar with small, really, Anthony? I'm surprised you say that, because whilst trading with smaller capital puts less emotional stress on the notional number. So when people scale up to 100 grand, 500 grand, a million and more, there's two scenarios, right? When you scale up and you make, I don't know, like that trade yesterday we discussed on that short, right? Which was what, 12,000? Was it 12? Was it 9? It was 12. So $12,772 made. People start comparing that to physical material instruments. And I don't necessarily mean cars. They can do, but they fix it to how much they're paying for a house, i.e. how much is your rent or your mortgage a month, $1,000, $2,000, right? They start going, wow, 12 grand. That's $1,000 a month. That's 12 months mortgage payments. Wow, that's scary. You know, so they start looking at it and tying it to some material item, and it starts scaring them. And the opposite side of it is the fact that I lost my trail of thought. The opposite side of it is you're now at a specific juncture where you're making enough money that you don't have to work for people or do what you don't want to do, right? To a degree. Have to find that consistency first. You can't just make 12 grand and then quit your job, right? You can go all in, but you don't necessarily have to quit your job. And to quit on 12 grand basically means you're not even paying tax, because in the UK, your basic allowance is about 12,700, right? I know there's a little bit more. If you don't want to pay national insurance, you can go lower at 9 grand. But if you want to pay national insurance into the system and you want to pay a little bit into the industry, keep it about 12.5 grand. I think it's either 12,570 or 12,750, but this is not tax advice. Anyway, you don't go and quit your job for 12.5 grand. If you're doing 12.5 grand a month, you could consider it. You know, if you know your outgoings are 4 or 5 grand a month, then fine. You know, that's comfortable. But yeah, I think when you're trading smaller accounts, yeah, see, that's crazy. 10K in a trading account and 10K for a year expenses. That's mental. That wouldn't even do me a month, like, in expenses. And that I don't live a crazy lifestyle. But my expenses are also considered as investment into SIPs, or investment into my stocks and shares ISA, or investments into my JISA, or into a LISA, or into the children's stocks and shares ISA as well. So they're first world problems, right? But the pressure you have when trading a small account, and I wasn't talking 10K, I was talking like $500, is you're trying to make 1,000%. And that's so difficult. You're going to blow those accounts up more often than not. There you go. So yeah, everyone puts too much pressure on themselves, I think. Let's move on to the DXY, because what I'm seeing in gold right now, I need to see a breakout. I need to see conviction to one side or another, and then we can look for it. But ultimately, I genuinely think I see more shorts. That's what I see at the moment. I see more shorts, but I'm not adverse to playing the longs. Again, I am agnostic to the markets. I am not someone that's going to be hell-bent on trying to call the market direction. I am more so looking at how do I get the best bang for my buck? Where is the probability of the edge, and how do I trade it? I don't give a where the market goes. I'll trade with that market, and I'll use the edge to do so. So we use the systematic, then we overlay the discretionary, and then we overlay the intuition. And that's what we do day in, day out. And that's what keeps us in the market. So let's take a look at the DXY, just because that will cover the euro dollar position as well. And then we'll round off at about 57 into Bitcoin, because we had that beautiful sell-off yesterday. So give me a moment, please, for the charts to load. Yeah, I reckon, Anthony, you probably hit a really nice dollar CAD position in about 2020 as well. I reckon you did. I remember that dollar CAD sell-off. So obviously, these were the sell-offs into the move. We had Wednesday's move, Thursday very range bound, and then of course we've been very, very corrective, but it's bullish corrective. So if we look here, we've had a push up, we've come back in respected demand, and then we've just ranged. So price has been trying to create higher highs and higher lows internally, but similar scenario. Range bound. Remember, markets range about 70% of the time. We only trend about 30% of the time. Sorry, my shoulders are killing me. So let's look for what happened on the DXY. I can't really say much more than that. Again, similar scenario, looking for breaks. We've called all of the moves so far, and I'm really happy to be providing you with this educational oversight, this educational analysis, and this breakdown, because I genuinely think it's very difficult to find such quality analysis from experienced personnel this day and age that do this consistently day in, day out. More so, people are just interested about selling you their affiliate codes to futures prop firms and talking about stupid stuff. And because we're obviously, if I did this on my personal channel, I could probably trade for you. I could actually show you executions, and I'd hit trades with you live in the markets. I'd open it up to the New York session and do it on my personal account, and I would show you. I'd potentially, if it was me as a personal, which doesn't constitute advice and guidance from my employer, and it wasn't prejudice to my contract, I would execute trades with you live throughout New York session and through European session if we could do so. But because we are running a regulated licensed entity and I work for the brokerage, and this is on the brokerage's platform, we cannot do that. That is constituted as advice and guidance, and we are not allowed to do that at this moment in time. Yeah, so we had shorts in the euro from around 120 into parity, which was probably wasn't one of my. Actually, it was. I'd say it was probably one of my best trades. We were calling that move all the way down. Yeah, that was a big move. But GU obviously had the same move. But the difference is GU has a floor. So getting into parity and trading below parity is pretty difficult, because we know the floor in pound versus the dollar. With the euro versus the dollar, parity and beyond is still present in a negative move, right? So coming into yesterday on the DXY, we had that initial push up, as we know, we spoke about. We broke out. We would look to see if that level could hold. We did get an initial reaction, but the push off was faked, traded to the downside throughout Thursday session, which again, similar scenario. This is the extension of the move. So we would expect this to ideally trade to there, which we didn't get. But what we did get is the close of 65,690s, which is one of the targets that we always discuss, which is about there, there. So we would have hit that target based on that move, but then what's happened is price has traded back up. So, I mean, the dollar looks like it wants a recovery, which means that the euro is going to sell off. But we are battling. Sorry, this is Bitcoin. Sorry, I'm not talking DXY anymore. Sorry. So Bitcoin obviously traded up. We failed to respect the move. And then what happened is this. So we got this took by this. So now what we'd be looking for is supply to take control if demand is going to fail, because demand has already failed once. Demand obviously then got hit. And this is the 15 minutes, so we can move down into the M5 to get more precise, right? Had that move. Demand got taken. We actually did hit it twice, right? Look, so demand failed, retraced, supply took control, demand failed, supply came in, took control. And then from here, we got an absolutely stunning sell-off. Stunning, stunning, stunning. Again, stop above either this high, up to you. You know, you've got your 1-to-1. You've got your 1.5. You probably got your 2s. You got 2.5 maybe. I mean, you are bottom picking at 2.5, but there is that move there. And that sell-off was absolutely wonderful. Like I said, someone gracefully blessed me with a story stating that they made 12,700 on that move yesterday. And I think when we look at Bitcoin right now, the fact that it's trading between 66,000 and 67,000 following its fourth straight weekly loss, we've got standard chartered analysts now coming out about warning that Bitcoin could drop below 50,000 as the digital gold narrative fails. And that fails to hold up against the resurgence of the US dollar. You know, we've got these big investment macro banks now coming out talking about Bitcoin and all of this. And to be honest, just don't listen to them. If these analysts and economists were as good as they were, they'd be trading. And they're not. So what are the key levels for me? We've got resistance on Bitcoin at $72,000. It's bearish at the moment. We have support at 60,000, which originally was that 63,000 level that we were talking about before that move to the downside. Consolidation moves in the euro dollar, which we've discussed. Gold, I want gold to reclaim some areas of support and resistance. So I'm neutral on that at the moment. And then dollar yen, the dollar yen is quite volatile. You know, we see range bound moves from 152 to 157. So that is a volatile range. That's a big range. And we know how the dollar yen moves, and sterling yen and euro yen. Everything is geared for a narrative that suits that situation. Look at Jamie Dimon at BTC over the years. Yeah, exactly. Bigger banks and boys are starting to try to get their word out about cryptocurrencies because they're seeing the volumes that go through it. All they want is the volumes. They're not interested in the price direction. They just want you to put your money with them. That's it. Does anyone else have any other questions? Wow, great year. I did 1,013% year one. That's pretty insane. I didn't see you write that comment. All right, so thank you very much for joining. You know, a fantastic session. Please trade safe going into Friday session. We have US CPI coming out later today. We have the DHS shutdown risk. And It's going to be an interesting move going into the weekend. We've got geopolitical risk. We have a lot of macro tailwinds, and we have general de-escalations and uncertainty in the economy. So please, if you are trading, try and trade very little risk and try to keep your positions minimal in going into the weekend. That's not advice. That's kind of more general concern. Do what you want at the end of the day. But as always, it's been an honor, a pleasure. I look forward to seeing you trade with us here at Seacrest Markets. Again, we offer up to 1 to 500 dynamic leverage, multiple asset class and instruments to trade on. And of course, we are expanding that to continue offering greater, larger, different style of instruments and expanding out into different asset classes as well. And of course, at the moment, as you can tell, we do have a first-time deposit credit bonus available to all first-time deposits. So please, as always, trade safe, trade smart, trade Seacrest, and I'll see you on Monday for the next live stream. So have an exceptional weekend. Enjoy your time with your friends, family, and loved ones, and I'll see you next.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check.